So let's now look at the next market. The next market is, of course, exchange traded funds. And let's look at the advantages and the disadvantages of the ETF market, or ETF for short. So the first advantage is that you can short the market just like you can with stocks or foreign exchange or some other types of markets that are available. We can make money as the market falls. So that's one of the major advantages that we have with ETF. We also have lower fees. So our fees are also lower. So our fees are lower here. Of course, that's a great advantage for any kind of investing or trading activity, because why? You retain more of the upside and you minimize the downside, which basically means less expense for us. And as an investor, of course, you understand that that's a great thing. The other great thing about ETFs is that they're tax efficient. So of course, any great investor that's looking at efficiency of tax, that wants to basically pay minimum amount of tax for whatever reason, then this is a great market to get involved in, because ETFs can be very tax efficient as well. Let's look at some of the disadvantages. So one of the big disadvantages is that the spreads can be too high. Of course, remember that spreads generally tend to be too high because there may be a less liquid market, there may not be as many participants. So to get an entry and a buy and a sell price means that it is, of course, a larger spread because the broker needs to make some element of commission. So that's not ideal for the ETF market. The other disadvantage is the fact that there are international limitations. So let me just make a note here. So international limitations basically mean for us that, if you're in a specific country, you may not necessarily get the availability of ETFs. But again, that's okay, because if you work with a really great platform provider, they will be able to give you access to other ETFs from other countries. So that is a disadvantage, but we can turn it into an advantage. The final disadvantage is low activity. So the fact that we have low activity means that we may not get as much movement in the ETF. That limits profit opportunities. So of course, as with the other markets, we saw that some of them were had higher volatility, They had higher volatility, which means that of course we could profit in a shorter space of time. This particular market, lower activity, which means not as much movement, so not as much profit in that shorter space of time. So maybe a market that needs to be held over a period of time. That's only for some of them. Remember, some ETFs you'll find will have great volatility and great movement, and those are your ideal ones. So you just want to keep these disadvantages in check so you can, of course, look for other opportunities.
We trust you enjoyed our Traders Education Center tech video. To unlock the full tech modules for free, click on the link below and hit the subscribe button. Then go ahead to register with your contact details and create your unique username and password to enjoy the fully unlocked tech modules.